All right, we are live. Let's get this started. All right, Wall Street and Washington teaming up to get Bitcoin. We're going to talk about that today. Just want to make sure we got everybody on here. All right, we're going to go live here. How's everybody doing? Yeah, so today we're going to talk about, or we're going to go over Bitcoin. I think it's getting time for crypto to start breaking out. I know the S&P is pulling back with NASDAQ. Weak, very weak. We called the correction. We said, hey, we're probably going to get a correction pretty soon. Here it is. We're down about 7% on the NASDAQ. We're down about 7% on the NASDAQ. I think we have a little more room to go. My guess is we bottom somewhere around 450, somewhere around 450 on the NASDAQ. Until then, the narrative for crypto, for Bitcoin is coming into light. The narrative for a lot of risk assets are starting to pick up because of the interest rate cuts and the new financial cycle, right? The new cycle starting to pick up. But I wanted to talk about Bitcoin because I think it's coming time that we see a breakout pretty soon here. Right now, this weekend, keep in mind here, okay, really today's stream is about how Washington and Wall Street are after Bitcoin. Washington and Wall Street are after Bitcoin. And this weekend, we have the Bitcoin conference, right? Why is that so relevant? Because you have a leading candidate speaking at the Bitcoin conference, right? You have Trump, you have a lot of candidates, Kathy Wood, everybody knows Kathy Wood, but you basically have Donald Trump there. And this is very significant because there's rumors, right? And rumors are rumors, but the catalyst alone is very strong. And the catalyst here politically is that, Trump is going to make Bitcoin a world reserve asset, right? Not the world reserve. I'm sorry, not the world reserve asset, but he's going to put Bitcoin in the category of a reserve asset, right? Versus deficit spending. We're going to talk about this. We'll go over it a little bit. So you have Bitcoin. You basically have Trump speaking this weekend. That can very much pump the price, break us out over this resistance line, and we're getting close to that. We see the RSI is resetting to the middle on the daily chart. We're getting ready to break out. I think it could be the end of July. Nobody knows. You better hope AMD holds above where it's at. AMD's holding on by a string. The chips are getting hit hard for sure. But I think we're running into this time where crypto is ready to break out. So just, first off, check this out. Justice Department. So the US, and here's the catalyst, right, for Bitcoin as a reserve asset. The US Justice Department holds 200,000 Bitcoin. The US is the second biggest crypto holder in the world next to Satoshi Nakamoto, which nobody knows if he exists. So really the US Justice Department, United States, is the biggest holder of crypto, right? The biggest holder of Bitcoin, at least. And as the largest holder of crypto, it's somewhere around 13 billion. That just basically says if Trump actually is elected, right? If he is elected, and that comes down, yeah, of course, not technically he's elected, but right now the market is betting on a Trump victory. That's just the odds, right? The odds are a Trump victory. And if that comes the case, he is speaking of making Bitcoin a reserve asset to fight against debasement. Plus, he knows a lot of millennials. He knows that there's 50 million holders, and around the world, it's only growing. That's an adoption rate. Therefore, it's going to be profitable. And the real case here is, if they move this to the treasury and it becomes a reserve asset, you get to print money because Trump is all about creating cheaper energy, right? For the most part, he wants to pump more oil. And what they can do, what a lot of people don't understand about Bitcoin, is the more oil you pump, the cheaper the energy you make it, right? If you have more supply of energy, if you can create more electricity at a cheaper price, then you can mine more Bitcoin. And Bitcoin is just money. It's basically gold. You're mining gold with cheap energy, very low cost. So Trump is unburdened by what has been. Okay. There's been a lot going on. But either way, just the point is this move for Bitcoin with Trump is a very strong catalyst. Probably the biggest catalyst nobody sees coming. This is a huge catalyst. I'm telling you, we're going to listen to Larry Fink, because here's the thing. Now you have Larry Fink. You have the most important man on Wall Street, possibly, right? The biggest man on Wall Street, Larry Fink, who is pro Bitcoin, who is scooping up the Bitcoins, who I think BlackRock took in $1 billion last month. Now you have Trump, possibly the most powerful man in Washington, coming up soon, and they're both pro Bitcoin. At the time when the supply shock is coming, when there's going to be a supply shock of Bitcoin, and Wall Street is going to be, coming into this, and you're getting the money supply coming, you're getting financing coming, all that stuff. But let's listen to Larry Fink so you can hear for yourself. Larry Fink, this is the king. This is basically the CEO of BlackRock, the biggest asset manager in the world. And he's very pro Bitcoin.
I believe Bitcoin is legitimate. I look at it as digital gold. I'm a major believer that there is a role for Bitcoin in portfolios. I believe you're going to see that as one of the asset classes that we all look at. I look at it as digital gold, as I said before. It is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits. And I believe there's a great industrial use for it. I think a lot of people are missing that. I was a skeptic, and I studied it, learned about it, and I came away saying, okay, my opinion 5 years ago was wrong.
So they say it takes 100 hours to understand Bitcoin. And Larry Fink talked about debasement of currency. Now, this is key here, right? Let's take the RSI off. No, we're going to leave it on there. This is key for Bitcoin, though. The debasement of currency is what the financial system does. The financial system, in order to keep up, in order to keep GDP growing, this is all in the course. In order for GDP to grow, it needs debt growth, right? The US Treasury has to debase the currency. They have to create more US Treasuries, more debt in order to fuel growth. That's how the system works. Unfortunately, that destroys savers, right? So when those cycles happen, and we're in the middle of that cycle right now, and when those cycles happen, the US Treasury prints a lot of debt, interest rates go higher, and somehow they have to monetize that debt. They create all these treasuries, but guess what? There's not a whole lot of buyers in the treasury market. So the central bank steps in and starts cutting interest rates, which we're heading into coming pretty soon here. They're going to start cutting rates probably in September. Always happens around a recession time because it's an easy way to go ahead and fuel or monetize the system back up. Now, every time that system happens, you get down here. This is our money supply growth, right? This is the liquidity that comes into the system. We're about to see that again. And every time you get the debasement of currency, this is the central bank basically financing government spending. That's all this is really in general. Central banks print money, right? This is M2. This is global money supply. They must recapitalize the banks so that the banks can buy the US treasuries and money supply goes higher. What also goes higher? Bitcoin goes much higher. This is crypto in general. Well, let's talk about Bitcoin here. Bitcoin is a reserve asset, is digital gold. Like Larry Fink said, he was wrong. He reassessed himself. And what we understand, and the retail traders or investors were really first on this because it's hard to understand this technology. And when you have trillions of dollars, you're not just going to dump into it because it sounds good. You got to do the research. Now we know for sure, Bitcoin is unmanipulatable. That's not even a word, but you can't manipulate the supply of Bitcoin. And that's what makes it so strong as a reserve asset, because it only prints so many Bitcoins per 10 minutes per 4 years, and that supply comes down. So we're looking at the supply shock here. When you have the supply shock and you have the financialization of the whole economy, basically the central banks printing money, Bitcoin goes much higher. Once that cycle is over, Bitcoin dumps for a year and then it starts to pick up again, right? And where we're at today we're at the bottom. We're basically picking back up. The central banks have been tightening the system. Now they're getting ready to cut interest rates, not to zero, but they're going to start cutting. They're going to start easing the cycle, especially with the new candidate coming in, and they're going to start increasing money supply into the system. We already had the Bank of Canada cut today. China's been cutting, and China also, if you have YouTube, you'll be able to see this. We have a chart of China. When China, Bitcoin is not just relative to the US. It is not it's a global asset, right? In that last column there, you can see that China always prints money in Q2, right? In Q2, going into this season, which is the end of the summer, all the way till December, China starts to print. And that also lends to money supply picking up. we're going to get QE pretty soon here because, you know, the government cannot pay the interest. They can't keep up with the interest. They use our tax dollars to pay for government spending. But the interest rates, the debt is so big that the interest rates are crushing, the payments are $1 trillion a month. The payments are too big, so they have to cut rates at some point. If you go into recession, it'll actually be worse for the economy. It'll be more inflationary if you go into recession, simply because you have to print more money to get people out of the recession. You have to, stimulate again. So they don't want to do that. They want to keep inflation kind of where it's at. So anyways, looking at Bitcoin, we're at that point in the cycle where we're about to see over the next 12 months, M2 go up again. I don't know how high it goes. We don't know. We don't know how much momentum comes in through QE because we do have productivity growth. We might not need as much as we did during the pandemic. The pandemic, we needed, the whole economy shut down. So we're not going to need that much money supply, but it is coming, right? Things are starting to slow down and we're getting that financial cycle starting to kick into place here. So this is, so we're looking at Bitcoin getting ready to come here. We have Larry, and there's a lot of demand. Larry Fink is not the only asset manager accumulating Bitcoin. BlackRock, who knows who else? They're all accumulating a lot of Bitcoin at the same time. You have the supply is falling apart. The crypto miners are gonna be able, they're gonna start shutting down their operations, a lot of them, because it takes more electricity to get less Bitcoins. Ever since the halving event that we had in, I think it was April, right? The Bitcoin halving, here it is in April. Once this event comes, the network cuts the rewards in half for the miner. So you're getting imagine if you get half the paycheck, right? If you're only getting half your paycheck, well, you have a choice. You can change jobs, you can quit, but you're going to have to sell those assets, or you can, stick with the same job and hope the price goes up. But, the price is not moving any higher. So it's choking out all the miners who are unprofitable at the moment. It's choking them out, right? It is choking them out. So basically, you have the Bitcoin conference coming up over the next couple of days. Usually it's around September, October when Bitcoin takes off. Larry Fink is talking about, okay, we're still bullish on Bitcoin. We're still accumulating Bitcoin. So you have a lot of Wall Street demand coming in. And Wall Street is really waiting for better regulation. And that regulation is coming from, is going to be anticipated in the fourth quarter if Trump wins. So this is really a Trump pump at the end of the day, right? Regardless of what you think right now, if those polls start to switch and somehow Kamala Harris starts to come into the lead, Bitcoin will not be as bullish unless she flips to Bitcoin, right? Unless she flips to Bitcoin. But at the moment, she's not leading the polls. And right now, the market is expecting Trump to come in. And if he announces at the Bitcoin conference that he's willing to put Bitcoin in a category of its own as a reserve asset, this will be the catalyst to get Bitcoin above this level, right? This will be the catalyst, regardless of the NASDAQ. It's an uncorrelated asset, right? This is an uncorrelated asset class. It is not correlated to big tech to the degree that it was in the bear market. Now in the bull market, it has its own narrative, right? It has its own narrative. It's not AI, it's blockchain technology. And another thing to understand is that this Bitcoin is one piece of crypto. It is the protect your money against government printing, protect your money against central bank debasement of currency, making your currency worth less. This actually holds the value of money over time. Sure, it has 80% crashes, but that's irrelevant because over time it's going up at 150% a year. There's more adoption in Bitcoin, at a faster rate than there is in any other asset class, not in commodities. Stocks are already pretty much oversupplied. I'm not saying there's no good stocks, don't get me wrong, but as a market, as overall market, the crypto asset class is a global market. You can buy it in any country. You can't just buy Tesla stock. You can't buy Nvidia unless you have US dollars. With Bitcoin, it doesn't matter what you have. You can purchase it. You can purchase it however you want, right? So it's a global asset class that is new. And it looks like it's going to be taking, the place of gold here. You have Larry Fink saying it himself. And I think Trump is starting to understand this, and a lot of other politicians, which is why they're making, legislation that is pro Bitcoin. Essentially, if the US starts mining Bitcoin, they're basically going to be printing money. And that is very valuable, especially with cheaper energy. You use the cheap energy, you mine the Bitcoin, you sell You sell the Bitcoin, so therefore you can store the energy value, you can store energy into the future, and that's not hasn't really been too possible in the past. So that's why, this weekend, if Trump announces that, I'm not saying this is the catalyst, but this is probably one of the biggest catalysts. And we look from a technical basis at Bitcoin. Okay, if we're looking on a technical basis, well, we kind of already set, and this is M2, right? Watch this M2 as Bitcoin literally is moving with money supply, not one for one, but pretty much. When money supply starts to pick up, Bitcoin explodes, Bitcoin moves higher. Oh, you guys can't see that, right? So Bitcoin moves up with the money supply. Hey, if you guys are on TikTok, jump over to YouTube to see the full chart. It's kind of hard to show the full chart on here. I got a vertical. So that's what we're looking at here. We're looking at this consolidation. The bigger the consolidation, the bigger the breakout also, okay? The longer we consolidate here, the bigger the breakout will be for Bitcoin. And we're in a traditional flag pattern moving sideways, and it's almost that time. So from a technical from a technical standpoint, if we go back to the weekly chart, right? Bitcoin technically on a technical basis, once we get to the overbought area and we pull back, we need to hold the middle. We just need to hold. We cooled off. I think we cooled off enough, and we need to hold the middle. You can see in the last bull markets, right? If we go back in history, just looking at RSI, I always like to look at RSI because it's just a momentum gauge. We hold. This is at least the monthly chart. Once the liquidity cycle turns on, okay, you guys can't see that on here on TikTok, but once the liquidity cycle turns up and it starts to move, Bitcoin typically stays above this mid range, this white line on the RSI. It typically holds that middle range because there's so much momentum coming in at the same time. There's less selling pressure. It's a very small market. Now we're at $1 trillion, so it's not going to be as powerful. You're not going to see, 10x on an easy 10x on Bitcoin. You might see a good 5x, right? You might see a 3x. My guess, just looking at things since, the new Trump, I don't want to say Trump regulation, it's not there yet, but now that Trump is very supportive and the White House is very friendly towards crypto, I'm thinking we see a $200,000 Bitcoin. I think that's a lot more possible than 150. And so that's what my instincts tell me at the moment. Trump corporate tax cuts. That's another thing. If we have tax cuts, right? If he's also going to implement tax cuts, the market is going to explode based off those tax cuts. A lot more people are educated now today and understanding that if you have more dollars, you do not spend the dollars. You don't hold them in your bank, you invest them somewhere. And I think a lot of people with those tax cuts are going to start investing. It's not just the middle class either. The tax cuts are for corporate, are going to be corporate tax cuts. And with corporate tax cuts comes, very strong economic cycle. That's the second part here. We're going to see an economic cycle really start to pick up. We already have the yield curve in a bull steepener. So we can go over to the bull steepener. We're in macro spring. Inflation is coming down. Growth is slow. It's cooling, but it's still in an upward momentum cycle. We're going to get GDP here. I believe, I think tomorrow or Friday, we get GDP. I think it's tomorrow. Let me double check. GDP is quarter over quarter, and it's expected to go up to 2%. So yeah, tomorrow we have GDP. If that comes in, at consensus, we are in macro spring because inflation is cooling while growth is not necessarily strong, but it's picking up momentum. Unemployment, sure, it is climbing up, but the market is expecting rate cuts. And we do have industrial production, which is, industrial production is, GDP is how many things are produced. It's the total value of everything produced. And you'll be able to see this on YouTube. Industrial production has been picking up. Okay, for the first time, it bottomed for a whole year. It moved sideways. And now we're starting to see that upwards pressure in industrial production. And companies are starting to, bank lending is picking up. We can kind of go to those charts. I think we're going to talk about that. But I first want to show the yield curve is uninverting. And what this means is the 2-year is here in orange. We got the 2-year yield. And then we have the 10-year here in blue. And kind of what we're seeing. Wait, this is the 2-year. Hold on. Which one is the 2-year? Make sure we got this correct. Do I got this backwards? No. Okay, there we go. 10-year. Yeah. So the 2-year is here. The 2-year yield or rate of interest, the 2-year borrowing rate is now falling versus the 10-year rate. That's a bull steepener. That's a bull steepener. What it basically means is that, see, banks, they lend, they borrow short, so they borrow at the short end, the blue line, and they lend long. Before, they're borrowing, they were underwater, or they're become, the expectation is that banks were going to be very underwater, they were going to collapse, and a lot of them did. We had banking crisis in 2023. And basically, if the long rates are higher, then they're borrowing at a high rate and they're making less money when they lend, right? If long rates are shorter, they're making less money. They're actually in the negative for the most part. So bank stress has been picking up, and financing is everything when it comes to the economy. Everything is financed. Businesses, governments, well, we're talking about banks here, but everything is financing. And now that financing cycle is starting to turn positive for the banks. You have they're in profit now. They're going to start. It's not like they're always in profit, but now profitability is picking up. You're having the yield curve starting to steepen, which people say, yeah, there's a recession coming, but it looks like the Fed is going to be ahead of that and cut rates. And that's part of the reason why the yields are coming down, right? Is simply because the market is anticipating lower bank borrowing rates. And if that's the case, and that's 24-hour rates, the Fed funds rate, if that's the case, then you're going to get lower rates on the short end. And banks are going to be back in a profit, meaning they can now recapitalize. They can now lend. They can start increasing their lending. And that brings us to the next macro chart that we're going to switch to here, which is bank lending is starting to pick up. Actually, we got it. Let's go right here. The credit impulse, right? So we're going to go to credit impulse. This is all part of macro. It's all a part of the cycle that is increasing at the moment. Here we go. Right. So this is what we call the credit impulse. Okay. It's part of the banking sector. And the credit impulse is how much credit or liquidity or money supply. It's not really just money supply, it's basically credit. So how much banks are able to lend versus GDP. And now that is picking up. So that usually is a leading indicator for the market. And let me see if I can enlarge it. There we go. And it tells us that banks, their lending is increasing in 2024 versus 2023. So banks are starting to extend credit, which does what? Well, the more credit they expand, the more financing can happen in the economy, the more companies can start expanding their production, the more that they can expand their production and the GDP growth. So businesses and companies are going to start expanding. That's partly why this is one of the big reasons why small caps are exploding, because they've had, small caps have got crushed the most versus the market because financing was so expensive, right? The expectation of financing was that it wasn't going to be good. And the Fed was going to be higher for longer. Now that we're getting closer to rate cuts. Well, investors are bidding into those small caps. We could take a look at small caps here. They're bidding into small caps in expectation that rates are going to be, and we're getting that rotation out of the queues, right? Tech is selling off. It was over concentrated. There's a lot of concentration in tech. We kind of know this. I think everybody kind of knows this. And now tech is deflating. Who knows how low it goes? But the rotation has been into small caps. This is your small cap index. Clear upside move here. Let's go to the daily chart. And a lot of this is bank lending, right? Bank lending is going to start picking up. The financial market is becoming healthier in anticipation of the Fed cutting. Now, let's say the Fed doesn't cut, we're in trouble. If the Fed doesn't cut, the correction will extend massively. We're probably going to have a massive correction because the market's already pricing in a cut in September. We possibly get one in July. Who knows? But it's going to come down to, are the expectations for a cut there or are they not? And that's why you're getting the switcheroo. Also, you remember last year. Okay, let's keep in mind last year, right? The big correction that we got literally 1 year ago, it was the end of the summertime, right? You had the summertime rally, boom, you had the fall correction. Well, we're having an early fall correction at the moment in tech, but we have a rotation taking place into small caps, into home builders, into anything interest rate sensitive, expecting that rate cut. So basically we have this correction, and damn, where was I going with this? We have this correction in tech. Oh, here we go. It ended in October. And one thing we learned last year to keep in mind here is October, the end of October is the end of the third quarter. And a lot of this move that we're thinking this through is mutual funds. They stop tax loss harvesting in October, which is usually why October is the end of the bear market, because these massive institutions stop selling in October. They're not going to get any benefits when they sell stocks or whatever, whatever asset they have. When they sell at a loss, it helps them with their taxes. Well, that's why they kept selling at a loss, because it's going to be beneficial for them financially. And they stop it at the end of October, and October was the bottom. We called this out literally last year, and I don't know how long this one goes, but we're looking at the same. History pretty much rhymes at this point. Let me go to those comments. I know I'm kind of behind on there. Hope all's well. How you doing, Ray Hayes? FNG all day. Fang 3x short. Oh, you've been shorting the Fang? Okay, nice. Um, right. So that's what we're looking at there. So small caps are bidding higher simply because they're sniffing out rate cuts, and the economy is going to be in trouble if the Fed doesn't cut, right? And we know the Fed is probably going to cut because we're seeing short-term rates. Well, we don't know if they're going to cut or not, but the market is telling us, right? These are short-term rate cuts. They're basically cutting ahead of the Fed. Short-term interest rates are coming down. That's going to help out small caps. That's going to help out all the companies who were underowned, small caps were very underowned, and their earnings aren't going to be great, but the market looks 12 months ahead, and the market is saying, okay, if interest rates are lower, your operating costs are going to be lower. If your operating costs are lower and inflation's coming down, and Trump wins and cuts taxes, corporate taxes, then small cap earnings are going to be much higher than next year than they are today. Therefore, small caps are breaking out. Right now, who knows how long this lasts? Tom Lee thinks it goes into next year, and they rally to about 300. Nobody can predict that, but the path for small caps is here, especially considering they haven't moved for the last 3 years, right? NASDAQ and the S&P are at all-time highs, where, small caps are still consolidating, right? Still consolidating. That's a pretty strong trend there. So that's probably what we're gonna get here. And I think we're really looking at a earnings correction. We're just looking at an earnings correction. I thought the market, the AI narrative, right? The bubble, people call it a bubble. I don't know where you get the bubble from, because a bubble is when companies and stocks and IPOs are going wild to the upside, and there's no real earnings, right? There's nothing to support it. And interest rates are too high, right? But at this point, interest rates are expected to come down. So I don't think it's really a NASDAQ bubble. Interest rates are expected to come down going forward. We're already getting bond yields come down. And at the same, we're looking at NASDAQ here. And at the same time, interest rates are expected to come down. Earnings are actually picking up. Earnings growth is picking up. Inflation is coming down. So this is not a bubble. It's just, you're going to get over exaggerated moves to the upside. We see it on the RSI. We see the overheating, I like to call on a technical basis. You overheat, we got to cool down. We overheat, we cool down, right? It's pretty, I don't want to say predictable, but it's pretty much what the market gives us: an overheating technically, and then a cool down. So we're in that cool down period, and we need a reset, right? The daily chart gives you a short-term trade possibly, but I don't think this might go all the way till September, October. And so I'm thinking we need to reset all the way back to the middle here. Do we go all the way to the bottom? I'm not sure if we go all the way to bottom. We haven't. That was, the week on the weekly chart. You don't want to see the RSI go all the way to oversold. That would be something very, on the weekly chart at least, that wouldn't be good, right? We just reset to the middle of the momentum. We want to stay in the upper range of the momentum and consolidate around there. We've had that. Right in 2020, the bull market, the RSI stayed right at the top, right from the middle to the top. So we cooled to the middle, we heated up, you don't want to go down, right? So we're in a good spot. We're just cooling down, and my target for NASDAQ at least is this previous high somewhere around here. I don't know exactly, 450, 448 on the Qs. NASDAQ's going to be obviously different, but it's just an earnings rotation. It's nothing terrible. Earnings are still pretty solid. I mean, Tesla's down, but that's one stock. Nvidia probably is way overheated for its earnings, but the fact that Nvidia is coming down, I think it's going to be clear that once Nvidia resets at the end of earnings season, I think it's just going clearly higher into the end of the year, because typically it only gets worse when stocks are straight up. The fact that Nvidia is already down 10%, what is it, 8.5, it got to be like somewhere around 10%. Let's see, we're down. Oh no, Nvidia's down a lot. Nvidia's down almost 20%. That's good news for the longer term trend. If anything, you want Nvidia to totally reset, or you could look at the chips as a whole, SMH. You want the chips to fully reset as they did back in April, right? And possibly you could sell, put credits down there, or you can get long. However you want to get long, it's up to you. But it's just a reset. Things are looking very bullish because the yield curve is we're getting a bullish yield curve. The economy is not in a crisis. Inflation is coming down. Growth is sluggish, but we're getting GDP tomorrow, and manufacturing industrials are starting to pick up. More goods are being produced, and you don't really hear this in the news because it's a little more economish, right? Economish. It's not really a highlight. Nobody's going to highlight, oh my gosh, industrial production is up. Retail sales are flat. People are still spending on services, and cars, new cars, those things are not doing well at all. Don't get me wrong, but that brings down inflation, not prices. That brings down costs. The housing market is in real trouble at the moment. Yes, the housing market is in trouble, but you can see that if we go to real estate's actually doing good, right? And this is why you always got to realize that the market, these are all real estate stocks here. Let's go to the monthly chart so you can just see the recovery. The market is not the economy. It's always looking 12 months ahead. And the reason we're getting these real estate companies starting to pick up, I mean, that one looks pretty bullish on a monthly basis. The reason these companies are picking up is they're anticipating lower interest rates, and lower interest rates means more mortgage demand, and more mortgage demand means more more construction, more expansion, more financing, right? More financing, more of all that. And we also have loans picking up. We see loans are not collapsing for real estate. They are in some areas, right? Depends on what sector. It's really a sector oriented game here. It's a sector game here. Oh wait, how did that get over there? I see. So real estate, where was the real estate at? Let me see. Oh, okay. Got it right here. So we know the credit volumes are up, so we're going to take a look at real estate here. We're just going to take a small, so we can kind of see how I know they say things are dire and they're falling apart. See if we can zoom in a little bit. Let's go ahead. Auto loans are bad. Okay. Auto loans are in Blackwatch. We'll take a look here. Auto loans are definitely suffering. That's one of the not financing mechanisms, but where demand is not there. Financing is falling for autos, and that's kind of good. We want auto prices down. It's not good for people trying to get a loan. They're going to get denied, but it's not as bad as the housing market, right? Business loans, on the other hand, are going nowhere. Business loans are not falling. They've been climbing slightly. They've been sideways. And this is where I'm speaking of the credit, right? Business loans are actually picking up. The volumes are going to start picking up, especially with the yield curve in a bull steepener where short-term rates are lower. And a lot of those loans for businesses are going to be short-term rates. They're financing payrolls, they're financing materials, they're financing buildings, whatever it is. And so here you have commercial real estate loans. Those have not slowed down. They're still rising. Commercial real estate loans are still rising, right? Credit card not as much. It's been kind of bumpy, but the more credit there is, the more the more credit there is, the more the economy grows because people are spending. As long as they have jobs, we're good, which is why unemployment is so crucial for Fed cuts, right? If unemployment keeps climbing, the Fed will cut. They cannot allow the real thing here with unemployment is if people lose their jobs, spending collapses. The spending collapses. Guess who has to spend if they lose their jobs. The US Treasury has to create more, increase the deficit even further and pay out people for unemployment. They don't want that. The Fed will cut rates pretty soon. We're getting closer to rate cuts. Inflation, if they cut rates. Yeah, inflation is a lot. I know a lot of people think, let's talk about that. I know a lot of people think it's going to be inflation if they cut rates. That is a myth. That is a myth. And I'll debate anybody on that. Rate cuts are not going to stimulate inflation significantly enough for inflation to actually move. That is a false narrative here. Okay, that's a false narrative. And yeah, that's pretty false. Let me see. What are we looking at? We're looking at, oh, this was housing. Builders, like you have home builders moving up. So a lot of these housing stocks or construction building stocks are just climbing because they're anticipating cuts, right? More stimulation, more financing, which they're just going to borrow more. So we're going to have more borrowing, more debt growing in the corporate sector, which is, corporate debt is not as bad as government debt. As long as somebody comes and buys the bonds, which will be the Fed at some point, then this will continue. So let's see. You and Tom Leon, I appreciate it. B Alpha, I appreciate it, man. Thanks. I think we're gonna have a big run here in crypto. I'm not always right, but for the most part, the bigger trends, the 3-month trends, I think I'd say I'm pretty good at guessing what we're gonna get in 3 months. Day trading is much harder to guess. The market will be in trouble if they cut rates also. No, not exactly. So anyways, we have people saying that rate cuts are going to accelerate inflation. So that, you know, banks still have to lend out the money. Inflation comes from a mismatch of supply and demand, right? If the Fed cuts rates, people don't automatically get money in their wallet. They still have to apply for the credit, right? They have to apply for the credit. And when inflation is falling, it doesn't just pick back up right away. It takes a lot to get inflation up. From 2010 to 2020, rates were zero, right? Interest rates were pretty much at zero. Where's the Fed funds rate? Oh, okay, we're on the wrong one. Interest rates were pretty much at zero, yet there was no inflation. It's added on here, Fed funds, right? So these were interest rates for 10 years, basically. They were at zero, yet the inflation rate never rose. I mean, not really, not meaningfully. So it's just such a false narrative to think lower rates stimulates inflation. What stimulates inflation is direct checks to people, because now you're giving them pure demand to spend into the economy, and it's either going into assets or it's going into the economy, and you're going to get consumer inflation. So rate cuts will inflate asset prices, but it's not going to cause inflation to pick up, especially when the economy is already slow, right? The economy has to overheat first for inflation to really start to stick. So that really doesn't make any sense. Zero, you'd have to explain how we had zero rates, but yet inflation never went higher in 2010 to 2020. We didn't really have any inflation, zero interest rates, right? Today, we're at 5.5%. So if the Fed cuts 25 basis points, how is that going to cause inflation? That's ridiculous, right? And the other part of inflation was supply chains. I think people, miss this. A big part of inflation is supply chains were broken. That's the supply side of the economy. It couldn't push through products or services to some degree, but it couldn't push through goods and services. And if they can't go through, then prices rise. Right now, our supply chains are strong. They're back to normal, right? We're back to pre-pandemic levels. So you're not going to get inflation spike unless the supply chains were to shut down. Also, it comes from oil price spikes. We're not getting an oil price spike, and we're at the end of the summer, right? We're at the end of the summertime. So we're not just going to get that. So anyways, that's just a false narrative that inflation comes from rate cuts. If anything, inflation will usually come from banks' excessive loans, but that still depends what the consumer does with those loans. And interest rates are still high, right? 25 basis points isn't going to bring somebody's credit card rates down to 5%. If anything, it's mostly businesses that can spend and expand. And if businesses can produce more goods and services, it actually pushes inflation prices down because you have more products, you have more services. So that's just not false. It is direct checks from the government that causes inflation because nobody's producing anything. There is no production process. It's just pure demand. When Jerome promised rate cuts, inflation went back up this winter. Um, no, Demiush, inflation went up not because of promising of rate cuts. Inflation went up because the supply chain, because of the war in the Middle East and China, the supply chain pressures index exploded. Right? We had what was it? It was the global. I think I still might have it on here, but the global shipping rates exploded. That's what caused inflation to go up a little bit. It wasn't Jerome Powell promising rate cuts. That doesn't make inflation go up. People are very confused on that. Businesses increasing production does not cause inflation to go up. It is spending money without producing anything. It's more demand into the economy, right? And that came from and it's also like a lack of supply. Those two things push up inflation, right? So again, it just doesn't make any sense. And if the central bank starts printing money, that creates asset inflation. It doesn't make consumer inflation go up. Consumer inflation is different than asset inflation. Asset inflation happens in the financial markets, right? If they have more money, then there's going to be more investment, and there's going to be way more investment. But if you have more money inside the banking sector, that doesn't cause consumer inflation because consumers don't have access to that money. They don't have access to that money. It doesn't. You don't. If the central bank cuts rates, you don't have more money in your bank account. It doesn't work that way, right? The banks have to extend your credit. They have to make the choice of doing that, and they have to allow you to spend more. Or if the government gives it to you straight up stimulus checks, that is very inflationary. Different types of inflation here. I do think we have deflation cycle right now. The question is, how will long Fed wait? How long Feds can hold the economy? Okay, how long can the Fed hold the economy up? Well, the Fed is actually pressuring the economy lower at the moment, right? The Fed is actually pressuring the economy lower. Rate interest rates are at 5.5%, while inflation is coming down. So they're actually putting pressure on the economy, not necessarily supporting the economy. They're supporting the banking sector. They are supporting the banking sector, but not the economy. And we're at the end of the summer, so oil prices are expected to come down. And what does a Trump victory do? Increases the supply of oil. What does that do? It pushes down oil prices. Dropping by to say, oh, what up? Calling for a short-term correction ahead of the curve. This is why you appreciate. Hey, thanks, Jervine. I just saw that. Appreciate it. Yeah, we did call for a correction in the Qs. I didn't think small caps are going to go up this high, but we did have a correction in the Qs. I wanted to just highlight though, real estate's going higher, small caps are going higher, financials are going higher, all because they're very interest rate sensitive and the market is expecting rate cuts. Okay, that's kind of the story here, but I still think crypto is the biggest story, which we were talking about earlier. It is macro spring. Growth is steady, right? It's not falling off a cliff yet. It's still steady. Inflation is steadily falling, led by shelter. The rate of prices in shelter, led by autos. Auto insurance is finally coming down, not the price, the rate of change is finally coming down. So the Fed is going to be able to cut rates a little bit. They're probably going to do QE because they don't want employment to drop too much. They do not want to. What's more inflationary is actually a recession. Not a slow recession, but a quick recession would be more inflationary because if there's no production in the economy and people just automatically get checks, they're going to spend the money. That's even more inflationary. You want people to have jobs. The more production, the more labor, the more products, the less inflation pressures. So you need employment to stay sticky if you want to avoid an inflation shock. And inflation shocks take a while. During the pandemic, we printed money. We cut rates in 2020. We didn't see inflation really rise till 2021. So it still takes a while. So maybe inflation rises again in 2025, right? The end of 2025 or 2026. But it's not happening anytime soon. Anyways, yeah, this Bitcoin cycle is big. We also have money supply picking up. So we have the credit impulse picking up. We have loans. You see that loans are still picking up. I know it sounds so dire, but loan growth is still picking up. And once financing comes into the market, when there's more lending of money, right, to businesses, when you have more lending, come on, open up. When you have more lending, well, money supply growth picks up, which is why we have this next thing. And this all points to crypto moving higher. It really does, right? So here you have the money supply of, I hate these little things on the side. Here we go. You have money supply picking up also. Let me make it easier to see. Enlarge. Here we go. Right. This is the blue is basically the absolute level of money supply. And then these are the rate of changes. The M1 and M2 are just the rate of change, right? Versus the previous year. But for the most part, we dipped. Money supply dipped. The amount of money in the economy contracted. Now it's back up. Right. So money supply, which is another way of saying collateral for lending collateral is picking back up. This is very bullish for asset prices, right? And it's very bullish for businesses who've been struggling. It is not inflationary by itself. If it causes more production, it is not inflationary. Productivity is key here, right? Rate of change also is moving higher. It bottomed in April of 2023. So the rate of change of money, right? The amount of money being created has been rising. The amount of bank deposits is rising because banks are lending again. And then you look at global M2, that's picking up, and this is all bullish for Bitcoin. This is global M2. The absolute level is picking up. Now, this is taking into account all the central banks, all the major central banks, right? We've been talking about this for a while. It stalled a little bit, but it's back up. You have China cutting rates. You have Japan actually hiking rates, which is interesting. That gives us a weird scenario, but Japan is hiking rates. And Canada just cut rates today, right? The ECB cut rates. It's now the Fed is next, and that's going to accelerate the collateral in the system, and crypto is going to rip. Now, a lot of I want to say tech stocks, but a lot of semiconductors, AI stuff has already ripped. Crypto is getting ready to rip further next, right? And I think this is our catalyst. This is one of our catalysts here going into the end of the year, is that you have more friendly regulation from the White House. I mean, the VP is literally a Bitcoin holder, right? So if they do, if they create legislation for Bitcoin, who knows if it's going to be a reserve asset? They're going to do something. They're going to try to mine more crypto, mine more Bitcoins, at least not crypto, Bitcoin, and because Bitcoin is different. They're going to mine more Bitcoin. And as they do that, they can use that as an asset outside of the bond market, because nobody's buying bonds. I'm sorry, younger people, the next generation is not buying bonds. They're not going to go buy US treasuries. The US has to figure out a way to recapitalize itself. What do? They print money. The central banks actually buy the bonds for the government. They're the ones monetizing the government. But us, the younger people, the people in crypto, in finance, understand the more bonds they make, the more bonds they purchase, the more they debase the dollar, the more they debase the currency. And that's what this conference is about, is, hey, your money is disappearing. It's deflating into nothing. So let's go ahead and use Bitcoin as an asset, as a reserve asset, because nobody is going to be respecting the dollar going forward as a financial instrument. They only respect the dollar because it is the best currency outside of, it is really the best currency, right? And Bitcoin's not a currency, but it's still a currency that loses its value over time. It's a currency that loses its value over time. And a lot of that value goes into, Bitcoin has been accumulating a lot of that value over the decades, over the last century. No, I'm just kidding, not century, over the last decade. And that's why Bitcoin's up 11 million%, because it is literally sucking all the money that not all the money, but it's sucking a large portion of central bank liquidity. And that's what these green bursts are. They're financing or central bank creating more money, and that money is correlated directly with Bitcoin going higher because it needs to go somewhere. Smart people who have money, they're not going to hold dollars. That's not smart unless you're, it's an emergency fund, great, but they're not going to hold dollars because it makes no sense. The dollar just loses value over time. If you're holding Bitcoin from the bottom of the pandemic, well, inflation didn't really hit you that hard because your asset value is up 10x. It's up 10 times. Inflation might be up 20%, but you're up 1,000%, right? You're up 1,000%. So that's the power of really knowing where to invest your excess cash, right? Your excess cash is that you're not going to lose buying power. You're just not going to lose buying power. And this cycle is starting to ramp up anyway at the moment. What else we got here? So we have the Bitcoin conference. That is this weekend. I think this might, I mean, it depends on what really Trump says, but this might break us out here to the upside. We'll see. We already touched the middle band, right? Larry Fink, super bullish. And you had this guy from Van Eck actually come in today. Let's actually look at that video. I had a guy from Van Eck come in to CNBC and talk about the crypto narrative. Oops, did I miss a comment? No, I didn't. So let's listen to that guy really quick. Just keep your ears ready. He kind of talks about where the world's headed, and he's an asset manager basically. And he's talking about Bitcoin. Let's listen in.
Third, it's our take that Bitcoin, as the first global, decentralized, immutable, censorship-resistant, fixed supply digital asset, which is tied to energy production, is the ultimate hedge on this rising fiscal recklessness. So in this report, we are assuming a bit of a 0 to 1 moment, that by 2050, 10% of international trade is denominated in Bitcoin, 5% of domestic trade, and that central banks initiate a position in Bitcoin at a roughly 2% weight. And for context, central banks have a 22% weight in gold.
So his bet is, hey, look, this is the new, I don't want to say new, it's not new anymore, but this is coming out to be a better reserve asset for asset managers, right? Which is why Larry Fink is bullish on Bitcoin. Simply because you cannot debase it. You cannot debase it. There's nobody who can create more of the Bitcoins. It just doesn't work. Number two, everybody owns it. So other countries might dump US Treasury bonds and say, you know what, we don't want US Treasury bonds because we don't want the, you know, in order to hold the Treasury bonds, you have to buy US dollars and we don't want to pump the US. So the US has to find a way to become the dominant power. We're already the dominant power. Don't get me wrong. We are the dominant power. US is the dominant power, but we always got to look 5 years ahead, 10 years ahead. And will US Treasury, will the bond market still be the most dominant power with the rise of India, the rise of Nigeria, the rise of Mexico? All these countries are rising up. Their population growths are picking up. Japan is not, and Japan owns bonds. So what else is going to be the reserve currency? How else will you create, a global dominant trade network where people, where countries feel comfortable investing in? Well, it might be Bitcoin. So it might be beneficial for the US to hold as much Bitcoin as possible. Therefore, they can lend out, they can lend it if they wanted to in the future, and they don't lose value because every central bank, every country is losing value on their currency. They're all losing value. It's, the dollar, you think inflation's bad in America. Psh, man, don't go to another country. The inflation is much worse. And, and it's not that the prices went up. It's so much that the currencies completely just fall apart in most other countries, right? We still have the best economy for the size, for the scale that we are in the world, but that might not last. So the Vanek manager is, screaming basically that, hey, look, I think people are starting to turn here, and we're realizing that we need to hold something, not gold, but we need to hold something that's going to retain our value as we go through these giant fiscal deficits. And when I say fiscal deficits, we're talking about government printing. You can't even stop them, right? You can't stop them. They just keep printing. They're debasing the value of your dollar each and every day. They're debasing your hard income. And what's another, what do you do? Hold your cash? No, you don't. You can buy real estate, great, but real estate doesn't outperform Bitcoin, and real estate's expensive. You can't just go buy a house and rent it out, right? For most people, you can go buy $100 of Bitcoin a month. That's totally different. So I think it's just a new way, helping out financing. And also energy is the other play here that people don't realize, that if the US starts mining Bitcoin, they can also sell a portion of that Bitcoin, as just like the miners do. They can sell a portion of it over time and literally collect money from the energy, or they can just hold on to it and sell it later if they need to fund if they need to fund some type of infrastructure. If they need to fund maybe some fiscal policy. So you can now fund policies without debasing the people. You're using Bitcoin to fund policies. You mine it, you sell it, you pay for the policy. And we know exactly how much they print versus in the past, today, not the past, today, they take out so much money and all they take out a lot of money and it basically hurts you. You just don't see it because you see it in prices over time, whether it's housing, whether it's food, whether it's energy. Prices will never be too crazy because there's too many producers, there's a lot of supply. But food, there's not enough producers for food. It's a competition, right? Businesses try to survive. So those things we do not need to be inflated. Healthcare, there's not a whole lot of supply of healthcare, and therefore healthcare prices are so high. That's the issue. You need more supply. So we need to reinvest into the supply of healthcare, into the supply of things that are inflating too much. The big companies like Nvidia, Apple, Amazon, they're all tech companies. So that's why software is cheap. Netflix, what is it, $20? I know it used to be 10. It did inflate, it did double, but it's cheaper than going and buying a movie ticket. You can watch Netflix for every day for a month for the same price as one movie ticket. So that's what technology does. And Bitcoin should make it a lot cheaper to provide energy and also just create global dominance when it comes to reserve assets. So Bitcoin is not competing with the dollar, but it is probably going to be competing with the U.S. Treasury bond market or complementing it to some degree. I think all of our trades are. Let me see what else we got here. In play. Okay. So small caps, Caterpillar. Yeah. Okay. Walmart. I think I'm short Walmart. I'm still waiting for that to come down. Amazon. I like Amazon. Let's take this off. NASDAQ has some room to drop here. Something I am looking at though is Celsius. Not a big fan of Celsius. I don't drink them anymore, and consumer spending is coming down, but I think Celsius might be setting up for a good options play, possibly. Put credit spread. It's just very oversold, overcooling. Let's take this global M2 off. We could take this off now. Right. So Celsius is overcooling. There should be some support at some point. It might even fill this gap down here at 35, but I am looking for put credit spreads or vertical spreads, however people say it, which is basically I'm going to buy it much lower than the price and hope it just doesn't go that low. Right. And the best opportunity for that is when things are already massively oversold, right? Massively overcooling to the downside. We might have a little more room to move for that RSI to get down here, but we're still in an uptrend. That's the only reason I would even mess with this. It's still in an uptrend. Okay. It's not a beautiful uptrend because it's kind of breaking the trend. Honestly, it is kind of breaking the trend, but it's still in an uptrend. And then what else we have? Builder. This is one of the building companies. Very strong uptrend. I like this one because it did get a little oversold, right? This is weekly. Yeah, it got oversold on the weekly, still in an uptrend. Really good divergence there. You're oversold and you're actually, let's draw it from here. You're oversold and you're pretty oversold, or you're in that area and you're still trending higher. So this is a nice play. Maybe one more little pullback. See what that daily looks like. Maybe one more pull in and find, holding support. They haven't had earnings. Okay, you might want to wait till earnings in. Unless you have an option that you can do it pretty cheap. CEG, this thing priced in such high earnings, so we'll see how this plays out. A lot of these you might want to wait till after earnings. Now this is getting crushed at the moment, but I still think the trend is much higher. It is a utilities company. It's been the hottest utilities company over in Virginia, where the biggest data centers are. The most data center usage is in Virginia, and this company provides the electricity. And you got to ask yourself, are data centers growing? Are they going to, increase, or are they going to stay as they are? They're going to increase. So they should increase on their revenues. They got a little overhead of themselves, right? Got a little overhead of themselves, but they are starting to correct. CEG is starting to correct. So I like that play as a theme, as an energy utilities theme. Okay. And I think it's gonna, it's kind of correlated to AI at the moment, because obviously it's AI capex that's fueling this higher. All right, let's get rid of this. All right, cool. So waiting for this to come down enough. I think it's almost there, but we'll see. We'll see how that plays out. Next, we have Freeport McNamara. Now, this is a play on copper. Okay, copper is now oversold. This where's copper at? Copper. This is a play on copper, though. Just kind of like how the Bitcoin ETFs. Let's see if we can find it. Here we go. Copper in a secular trend. Why copper? Because copper is a natural resource, a commodity, and it's in a bullish commodity cycle. It's what you need to build. It's basically the infrastructure for computer networks. It's the infrastructure for AI. You need copper, you need electricity. Therefore, we have Constellation Energy for electricity, and we have Freeport McMoran. I don't even know how to say it, McMoran, for the actual copper, right? The conductor of the electricity. This is in an uptrend. And I think this is going to be a healthy. This is really good, right? Once it breaks out, it's going to be monstrous. So I like this one. I actually like this better. This looks better than CEG at the moment. You got another copper company right here. This is Southern Copper Corporation. This one failed on us. I was long this ConocoPhillips, but looks like it's having some trouble. It is forming a big trend, but when you price in the Trump, if the market is pricing in the Trump trade, then you're basically looking at lower oil prices going forward. Therefore, their margins and their revenues are not going to be that great. I should have saw this ahead of time. I didn't see that. I'm still holding it because I'm using options, so I'm not too worried. We'll see how that plays out. But also, we kind of reached peak demand for oil, end of July. Therefore, oil's not going much higher. So that's not a great play. TLT, a little disappointed. I thought this would break out sooner, maybe when the rate cuts come in, but it looks like most of the curve or most of the bonds getting bought up are the short-term bonds. Long-term bonds are just not moving. Long-term bonds will move if we get unemployment move to 4.2. The more imminent the recession, the more closer we get to a big breakout in TLT. I wish there was a better short-term vehicle, but there's really not. TLT is your best bet here. I've looked at a lot of them. I think TLT is the best bet. Robinhood, waiting for the reset. It's going to move with crypto. So Robinhood will move higher if you're waiting for it. You wait for the reset. It probably comes back into, I have it coming back to like 19 during this correction. AMD, disappointed, got smashed right out of that trend. Now, we are heading into the capex. I mean, not the capex cycle, but the chip cycle, the end of the chip cycle, where a lot of these chips are going to get kind of downgraded. They're going to be cheaper. So you might have to wait a long time for this, just like you did here. Usually October is where it bottoms. So I might just stay off of AMD until I really start to see it bottom again. The more time, the bigger the breakout. But I still like AMD as a play. I think it can move to 250. It might have to wait till the end of the year. We'll see. And I still think, crypto's the easiest play. Let's go ahead and end with Bitcoin. I think we hit everything though, right? Bull steepener, very good for banks, for builders, for real estate, for financials. That's why they're all moving up. We still have a bull market in the Dow, at least, or in those, not a bull market, but we haven't had a giant correction in those stocks because of the bull steepener. Okay, because of the expectation of rate cuts, because inflation is coming down. Number two, and that's the financial cycle. We should be seeing liquidity come in. The earnings correction. Okay, yeah, the earnings correction is hitting big tech the most. So QQQ is getting smacked, right? And we talked about this before. The Qs typically bottom. We're on the weekly chart when the RSI resets to the midpoint, right? We're looking for some support into the midpoint that also aligns with that also aligns with this long-term trend. Oh, you guys can't even see it. No wonder. You guys can't even see it on TikTok. That aligns with, I'm sorry, unfortunately, we're pretty much done here. So I'm not going to go over any other stocks. But you're waiting for this RSI to reset. Typically, when it does reset, you get the support right at the trend, right? It's not going to be perfect, but it's going to come into that trend. That'll be a better area to start getting long. That'll be a better area to start getting long. And we're looking for somewhere around 450. I'm looking for somewhere around 450, maybe 448 to start getting long. And I'll be buying puts on this. I'll be selling puts. I'm sorry, not buying puts. I'll be selling puts down here. And I think it's just an easier trade to sell puts when it's overextended like that than trying to, buy a bunch of calls, because even if you buy a bunch of calls, they're going to be expensive. And if it doesn't break out right away, your calls are going to lose value versus the puts. They gain value no matter what, as long as the market does bounce and stays stable. So I'll be selling puts. So I think that's what we're looking at for NASDAQ in the short term, right? In the short term, this thing got way overextended. I'm actually selling some puts at 457. 457 puts closing tomorrow. So I better hope for a bounce here. Oh, you can't even see it. I'm hoping for a bounce. If we open up higher tomorrow, I'll literally just exit. I should be up because it's going to end at the end of the day, right? It's just a 10 delta credit spread. If you want to read about that, go to the website, check it out, how to do 10 delta credit spreads. I'll be making videos in the future on that, but for now we're doing a lot of macro stuff. So I'm looking for this bounce. Now, where could the NASDAQ go in the short term? Maybe 461.50 or 460. Clear resistance right here. Does it really matter? Not really, but I think we're a little overdone. I think we're a little overdone on the NASDAQ. I mean, we can go to the third. This is a 30-minute chart, so we should be turning up here, right? Even if we gap up and roll over, we still should gap up or at least move higher tomorrow. If we go on the 1-hour chart, we're still oversold. We're overcooled. We need to recover, right? Doesn't mean price needs to go very high, but if you're short-term trading, it's going to go up. Unless there's some big scare. 2 hours, same thing. Let's go to the 4-hour chart. 4-hour chart has been down for a minute, right? We've already had like 2 days of just oversold territory on the 2 hours. So I think it's due for a bounce. Now, on the bounce, I am not going to stay long. Any bounce, I'm exiting. I'm exiting and I'm shorting because I don't think this correction is over. See the 1 day, we still have some room on the 1 day chart. We got room on that's a vicious correction. That's a pretty vicious correction. It went past my target. Vicious correction, but I think we're going to bounce here. We're getting very close to just oversold on every single chart. We should get a bounce and possibly fill the gap here at 480. I mean, who knows? We're probably going to fill the gap somewhere up here. And then I'm going to short this. I'm getting short because I just don't think we're going to recover anytime soon. Depends how vicious the rally is. If we have a vicious rally to the upside, I'm shorting it. If it's a slow grind, I'll probably still short it with smaller size. But the more vicious the rally, the more likely I am going to short it because I think we need to get past NVIDIA earnings before we see any clarity. The only positive here too, going in tomorrow, GDP is expected to come in good. So we should bounce. And then PCE is on Friday. So we should bounce. So all you short-term traders, where am I looking to short? I don't know if I'm looking at a specific level, but I'll give you a breakdown. I at least want to see the price come back to this breakdown area right here, right? So this is an area that I want to see the price come back to, which is like 475-ish, maybe 475. It was kind of a breakdown between this head. You can see like a very weak head and shoulders, right? Broke below that. So I want to see a retest of that neckline, I guess, as they call it, the neckline, the retest of the neckline. And then I want to see it roll over. But at the same time, I don't want to just see the neckline. I don't think, I want to see more than just a level. I also want to see the 30-minute RSI right back to the top. I want to see it get overheated. So on the correction to the upside, I want to see this RSI overheat, sort of like it did here. It kind of got overheated and price rolled over, right? rolled over, made a new high, but it was overheated and it just couldn't make a new high. So I'm thinking somewhere around 480. I mean, I don't know, somewhere around this level, right? 480, 482 probably doesn't make a new high. I want to see some weakness, but I definitely want to see the RSI get oversold in that 30-minute, and I want to see it over. I don't know if it gets to the 4-hour. I don't know if the 4-hour actually goes back to the top. I kind of doubt that. Maybe the 1-hour chart. We might get the 1-hour chart bounce back up. When I say the 1 hour, I'm talking about the RSI. We might see the RSI come to the top on the 1-hour chart. I doubt the 4-hour. The 1 day, I don't think so. But yeah, I'll be looking to short when I see an overheated RSI on the 30-minute, on the 1-hour chart, possibly the 4-hour chart, somewhere around 480. And then I'll be looking to short, continue to short this rally. I don't think the sell-off is done yet. Do you have a top 3 undergraduate course for finance? I do, Bookster. I do not have a top 3 course, but I am building a beginner's course. For, you could call it finance, but it's mostly like macroeconomic and like stock market, right? It's mostly about markets. The course I'm building right now is like how the financial system works with the economic system, how to understand it, how to read the cycles and the business cycle. So where's growth? Growth and inflation, how to read those. A lot of people are confused. They think inflation's coming up. It's ridiculous. Inflation is not going higher. Prices always go higher. Inflation is not. But also, yeah, just education on how the economy works, and not just how the economy works, but how to read the economy, how to actually read growth, industrial production, diffusion indexes, right? So how many sectors, how wide or how broad the economy is growing, not just in one sector, but how broad it is, right? Also reading leading indicators, lagging indicators, right? All that stuff. Uh, how it connects financing, how interest rate cycles work, liquidity, where to look, all that stuff. And then also technicals, that's coming next. So it's not a finance course. I think they're all trash, honestly. You're not going to go, listen, you're not going to go to college and teach you how the stock market works. They just don't. It doesn't exist. And that's what I'm trying to build here. Since last October, I've been working on this, and I'm going to keep working on it. I mean, you can't make things quickly, but I am building a course for understanding not just the fundamentals, not just PE ratios. Those are ridiculous. PE ratios do not tell you how the stock market works. It's a signal, but you don't just go buy a stock because the PE is low. That is stupid. You want to see the technical support. You also want to have the macro support, right? Does that industry fit in with the fiscal stimulus, right? Does that industry fit in? Is that industry going to benefit from interest rate cuts? What are interest rate cuts? Is it just the Fed or bond yields, right? How does the bond market work? They don't teach you that stuff. So I'm building a course to, it's hard to explain because there's so many details, but it's basically what drives markets. Bookster, if you want to learn what drives markets, just stay tuned. I'm building that course in sections. I'm not going to make you buy the whole thing. I think I'm going to do the macroeconomic beginner and then more advanced, and then I'll sell the technical stuff, a little bit of fundamentals in there, and there'll be some beginner finance, like how to save money, what is investing, why you should invest. All that stuff will be in the course. Just stay tuned. Go to the website, and if you want to get the newsletter, check out the newsletter. It's free for now. That newsletter is free, and I'm not going to charge for the newsletter. I'll always have a free newsletter unless unless you get the course in the future, then we might have a paid newsletter that gives you a little more deeper knowledge. But I think people need to be educated first. You can't just tell people what to do or what they should do. You just want to educate them and then say, hey, look, this is what I'm looking at, right? For now, it's free though, so go check that out. We've been calling all these bull markets, all the corrections, pretty much, and Fed rate cuts and inflation coming down. You guys remember we said inflation would come down, and everybody's like, no, inflation is not coming down. And I said, no, the leading indicators are telling us that inflation should be printing lower. And everybody got pissed. No, it's not. It's going higher. Reinflate. No, it's not. It's coming down because you're looking at the wrong stuff, because you're listening to the wrong people. I don't even know where people listen to who. Listen, I'll give you a freebie. Listen to Tom Lee. He's a complete monster. Tom Lee is a complete monster. People hate on him, but he's a monster. He's called everything since 2022. The only issue is if you're a beginner, you're not going to know what the hell he's talking about because they speak in such high terminology, such high level terminology. And my course is meant to break down that terminology in simple terms so a beginner can understand that stuff. I wish I could know. It took me years to understand how this terminology translates into the market, right? So, anyways, stay tuned for that. Anyways, I think we're gonna get a bounce tomorrow in the Qs. Either tomorrow because GDP should come in. If GDP comes in at 2%, we should get a bounce. Maybe we gap down. I wouldn't even doubt if we gap down to like 460 and then just move up all day tomorrow. I would not doubt that, but we will have a recovery by the end of the week because PCE is set to come in really good, right? PCE is personal consumption. Everybody's looking at CPI, but you want to look at PCE because CPI is only relevant as it pertains to the Fed. That's it. So people look at CPI and think, oh, I know what's going to happen next. No, it's what the market is concerned with interest rate cuts. It's not concerned with CPI. It's concerned with what the Fed thinks about CPI, and the Fed doesn't care or look at CPI. They're looking at PCE, personal consumption expenditure. They're looking at that. That comes in on Friday, and it's looking pretty good. It should come out around 2.5% year over year. Core maybe 2.6. Who knows? Either way, the expectation for Fed cuts is rising slowly, and this correction that we're seeing here, I mean, I'm getting so bullish when it finishes. Once we're done correcting, I am getting very bullish for the end of the year rally. It might not start till September, October, who knows? But we're going to have a monster rally by the time it comes. We will have a monster rally. I mean, I can't say we will. I don't know that because there's all these other factors, but everything else held equal, we should have a monster rally. I think the biggest rally is going to be in crypto, end of the year rally because of the stuff we talked about with Trump deregulating, his VP being supportive of crypto, possible reserve asset. I mean, it's just very bullish for crypto. But other than that, I think we touched upon everything. Small caps, look out for small caps. I think they're going to have a correction and then a rip, a rip higher, much rip higher. Like right now, we need a correction. Small caps have broken out of the range they've been in. They've been in this range for what, 2 years? They broke out of this range. That's very strong. But they came out so explosive. They need a reset. Just like we always say, the RSI needs to reset, right? We need to cool off. Maybe around this 50 midpoint, we cool off. And then, if we come down about 210, I'd get long. I'd definitely get long around 210. And, your stop has to be no cuts. Not just a level, but no Fed, no rate cuts. Now, the problem is that'll price in before you even know it. But I think the Fed will cut. They have no choice. Unemployment is rising. They can't allow unemployment to rise. I'm not going to talk about XRP. I don't like XRP. I think XRP is a trash. I think XRP is trash. I like Bitcoin, Ethereum, Chainlink. That's it. That's all I'm going to talk about. Solana is a monster, but Bitcoin, Ethereum, and Chainlink, XRP has lost its narrative. The market is not looking for a blockchain. They're building their own blockchain. So XRP no longer is relevant because of that. KM9422. I like your comment. What is your issue? Or did you just want some attention, or did you have like a constructive criticism? No, I just wanted some attention. Okay. Sometimes you get some bots. They just want some attention. But any other questions before we get out of here? The Fed's going to cut. The Fed now, do they cut in July? I don't know. They could, they might, but they're likely going to cut in September. I mean, I think the September rate cut is pretty clear. The bond market is pricing in small caps, maybe not Qs, but small caps are pricing it in. And that's what I wanted to show. Okay, before we leave, this is what I wanted to show you. This is the real signal. This is going to be part of the course. The real signal to the crypto breakout is going to be when the dollar breaks. Right? When the dollar breaks, that's when financing is really picking up. Basically, the banking sector is going to be creating more deposits to loan out, and when you create more money, the dollar falls. How long till ETH hits 3,800? Shoot, I don't know. I mean, ETH could probably hit 3,800 in September. It could hit 3,800 this weekend, like with Trump speaking. So it's kind of hard to predict. Um, let's see. What do you think of Turbo? What up, Ray? Since Nvidia is correcting, are you going to buy and hold for Q2 report? Good question. I'm not interested in Nvidia at this point. Me personally, I would trade Nvidia. I think it's too expensive to try to own. I wouldn't try to own Nvidia at this point. I would only want to own Nvidia if it crashes a lot. That's it. But me personally, I wouldn't own Nvidia. I'd rather own AMD. I think the risk reward is better. Nvidia's the safer play for sure, but I'm a trader, so I wouldn't really hold Nvidia. I'd rather hold Tesla if I'm going to hold something. But it's almost down there. It's almost reset fully, Ray. I would say the report, the fact that it's already down near 20%, it's not going to drop too much more. I mean, maybe it comes to 100 at the lowest, but it will definitely bounce, right? The chips they've been up too much. These AI plays, they were in a mini bubble. I don't call it a bubble, but they were overheating. So it really depends. If we sell off into earnings, I don't think it's a bad buy. But if it breaks out into earnings, I would wait. I would just be patient. I want to see 25% with Nvidia, at least a 25% breakdown. Turbo for crypto. What do you think of turbo? Are you talking about like turbo tax? Turbo tax? Not sure what you meant there by turbo for crypto. And if you're new here, I am watching this chart. This is Chainlink crypto. Not a whole lot of noise. It's been kind of quiet. Oh, it's a meme coin. Okay, Ray, I don't mess with the meme coins. I wouldn't even mess with them. It's too dangerous, too unpredictable. I wouldn't mess with the meme coins personally. Only Ethereum, Bitcoin, and Chainlink. I mean, Chainlink has a real use case. You just get bigger in the things that are highly probable to actually be a real use case in the financial system. And Chainlink is a real use case. Swift, the number one banking messaging system, is utilizing Chainlink. JP Morgan, every single private blockchain, they're all using this. 21 shares. ARK Invest 21 shares has basically tokenized their ETF into the crypto market, and they're using Chainlink. They're using proof of reserve. So Chainlink, not even close, is the best. I mean, when I say best, fundamentally is the best coin, has the biggest reach. And I think it's just a for sure thing. This is a for sure thing where most meme coins, they might not make it back to all-time highs. A lot of them will not make it back to all-time highs. I'm not a meme coin guy. Dogecoin, I think it never makes it back. I don't think Dogecoin ever makes it back. XRP lost. XRP hasn't made a new high in 6 years, right? XRP has a curse. Solana's probably going to explode. I think Solana's probably going to outperform a lot of other stuff, but it is competing against Ethereum. And once Ethereum gets better, I don't want to compete against anybody. Chainlink is competing with no one. It is the dominant oracle, and it does a lot more than just price feeds. It is a CCIP brings in revenues for other banks or for other financial institutions. So pretty bullish on Chainlink. Anyways, been a while. Outside that, I think we're done here. If we have no more questions, stay tuned. I think the Qs are going to bounce, and then I think maybe the market. I just talk about the Qs because this is basically big tech selling off. I think we're a little oversold. We probably retest this 480 level somewhere around here, try to fill the gap, and then roll over again, waiting for the Fed to cut rates and waiting for the end of earnings for Apple, for Nvidia. Solana is surprising ETH on all. Yeah, that's true. That is true. Solana is crushing it. I think Solana is about to break out. Let's see. Solana. Yeah, Solana looks. I mean, technically, Solana probably has the best chart. To be honest, Solana probably has the best chart on a technical basis. Probably has the best chart. I mean, that's ridiculous. The only issue is it's just like competing with Ethereum. I don't see institutions plugging into Solana. I don't see that. I think it's more of a retail. I think it's more of a retail play for crypto. Oh, Sol ETH. I know people were talking about that. Sol ETH. Oh yeah. Oh man, it's about to start gaining dominance against Ethereum. Yeah, Solana looks good. It's outperforming Chainlink. See, Chainlink can't even catch a bid against ETH. Come on, Chainlink. Yeah, Chainlink looks like trash right now. I have confidence though. I have confidence in it. But Solana's definitely dominating at the moment. Solana is dominating. Ooh, dang, synthetics got destroyed. See, some of these coins are still making more lows. That's unfortunate. All right, well, we got the Bitcoin conference on this weekend. So look out for crypto to explode. You got Donald Trump backing it. You got his VP. You have the fiscal authorities backing. Well, they're not backing crypto yet, but the belief is that the fiscal authorities will start looking at crypto and Bitcoin as something to implement and regulate. And that's going to bring in a lot more investment. And you have, the ETF was the biggest was probably the best ETF of all time. Ethereum just came out their ETF. So crypto in itself, it's going to compete against itself, but crypto in general is going to be, I think, the trade going into the end of the year. I know I've been saying that all year. Going into the summertime, I thought it'd break out. It didn't happen. I was wrong, right? But we did have the summertime rally with the stock market. But I've seen these cycles before, and I've never seen this much positive, constructive, not just news, but drivers, right? This many drivers going into a crypto cycle. I've never seen this many drivers going into a crypto cycle. You have interest rates you basically have the liquidity cycle picking up, right? Central banks are cutting. They're increasing the amount of capital into capital markets to prevent a recession. That pushes crypto much higher. That means more liquidity. You have pro-regulation. That means more investment, more, not liquidity, but you have more investment, bigger institutions to invest in it. And to bring it all together, I mean, the supply of Bitcoin is falling apart. So we're pretty bullish here. All right, I'm out of here. You guys stay blessed. Always work out. Stay fit. Stay smart. Make sure you read, do something, get better at something. Everybody can get better. Everybody can be great at something. So just keep up the hard work. I know you guys are working hard, and get through the day. Lift weights. Do what you can. Eat healthy. Eat healthy also. Okay. And stay fit. We'll catch you guys next time.